So let's say you got a spending habit. You know, you get paid, you're not very good at hanging on to your money, right? And you're left with this small account, you know, $100 in here, roughly Canadian, worth way less American. What do you do? How do you grow that small account? How do you flip that account faster into a large-ish account so that you can actually start practicing the normal Forex rules? Because I know it's very tempting to want to grow that smaller account very, very quickly, because this $100 probably doesn't mean too much to you right away, because it is such a small amount. But once you do get to that $10,000 mark, then you're going to want to actually start practicing all of the rules that I've been talking about in other videos. And I completely understand this. You guys don't necessarily want to be super risk management like I do teach normally. So let's kind of dive into what you would do if you only had $100 and you wanted to grow that into 10,000. All right, guys. So, like usual, everyone likes 3 easy tips. So, I think we're going to do that again. We're going to go 3 easy tips on how you're going to grow your small account. And I will actually make an effort in the future to make a strategy around growing a small account. So, make sure that you hit the subscribe there so that you can jump on that. If you do have a smaller account, you know, less than 10K, I would say it would be a specific strategy, maybe even less than 1,000 or something, a specific strategy that I think would be most well versed for very small cap accounts, people who need that thing there. So the first thing that I would want to mention with growing a small account is you do still want to manage your risk, at least to some degree, in that you have to have the same amount of risk in each trade with slight variations depending on the strategy, depending on the setup. But you generally always want to be following the same loss per trade usually. So, you know, for example, if you're a new trader here, I assume you are if you have a new account, the pound pairs, they actually move a lot more in pips on average. So a single lot size for every single trade, so let's say you bet 0.02 for every single trade, that you're actually going to lose way more on the pound pairs when you actually take a loss. So you have to actually calculate your risk properly here. So the next thing that we'll need to note is that swing trades, longer term trades, those are really going to make you lose more of your account as well. So we're not going to really be able to take those swing trades because the lowest amount that you're going to be able to trade is 0.01, and we might want to be taking profits along the way. So I don't even recommend doing a binary trade like that where it's either you're in or you're out. You should be able to take profit along the way if something does arise. So we do need to make sure that we completely omit the swing trades. So we're going to have to dive into a strategy, and that'll be in a future video, where we are looking at the lower time frames and we're looking at a day trading type thing, and we're looking for the optimal entry timing and then getting in and out very quickly, because that's going to allow us to have a tighter stop, and then we're going to be able to bet higher amounts. Because if you only have $100, for example, you're really going to have a problem, because you're going to need to be betting, 0.02 even on these small scalp trades, and that's going to be basically the minimum that you can do there. The next thing that you can do, I really strongly always have been advocating, and I teach people how to actually calculate their position size, that we want to risk 2% of our total account per trade, or 1% if you're using a larger account over 10K. That's my personal preference. And then when you get even bigger, you go even lower than that. And so this kind of holds true as well, because in a smaller account, what I just said in the first tip there is you're going to be able to risk more here so that you can take those profits. So I would never risk more than 5%. And if you guys want to know a formula, I have made some videos on how to calculate your risk size if you want to check those out on the channel. And we're going to basically be going, and we're going to be calculating a 5% loss for every single trade. And then that way, you're going to be able to grow that small account faster, assuming that you do have a profitable strategy. Now, the reason I say 5% as an absolute maximum is because it's very easy when you guys are starting out. You can very easily go on like a 10 loss losing streak. And that's going to basically, after diminishing returns because your account's getting smaller, you're going to be left with about 60% of your account. And that's a major drawdown for some people's mental psyche. Mind you, if you only have $100, $40 loss might not be a big deal for you. So that's why, you can go with the 5%. It's not really a big deal. But the name of the game, guys, remember, is you want to keep your capital. And you have to even think that way when you have a small account. Don't ever be going into things saying, okay, we're going to kind of go all or nothing here. That's a very, very risky way to go. Always cut your losers and then continue with the next trade. And then you just keep going on until you fully understand things. In the long run, it's a very long-term game here. So I'm actually just going to show you guys quickly on how I'm going to calculate risk here just in this video as well. So if we do want to calculate risk, let's say that we wanted to take a short on this trade for whatever reason. We wanted to go sell right there. We put our stop above there, and then we target wherever we want here. So normally what I would advise is we would risk 2% of our account each time. But as you have a smaller account, you don't care as much. So we can go as high as 5%, and I think that's perfectly fair for you guys who just want to grow a little bit faster. You want a little bit more excitement, because nobody really cares about losing, $2 per trade, something like that. It's not really a big deal. $5 maybe, it's a little bit more of a deal. It really depends on who you are. So what we're going to do is we're going to pull up our calculator tool here. And the very easiest formula, or you can use a tool that calculates for you. This is just very easy for me. What we do is we place our tool down there, our position tool, and then we say $100, which is our account size. And then we times it by how much we want to risk. So we want to risk 5%, right? So $500 is how much we're able to use. And then we're going to divide that by the percent distance to the stop. So you see right there, 0.45, 0.45. So we divide that, we'll have to clear that. 500 divided by 0.45 is going to give us this number here, right? So you can see that this is kind of a funky number. What we have to do is, this is a US dollar value. We have to convert this to lots, and one lot is $100,000, if you guys know this already. So we have to divide that by $100,000. And that's going to give us how much we need to bet for our trade to work. So you could really understand what I'm talking about here is, if you only have a $100 account and you make a trade like this, which is a relatively low time frame, it's a 15-minute, and it's not a very distant stop, is it? That's probably the widest stop that you could handle, and it's still going to be a 0.01 lot size. So that means you have to let it run to the very end. So in a case like this, I would actually be wanting to take profits earlier if I do have a binary if I have a 0.01 trade, because I don't think I'm going to be able to get to the very end. Maybe my first take profit might have been around here, my second take profit would have been around here. So I'm going to look to get off maybe somewhere in the middle, maybe a strong resistance area, and I'm going to have to take a shorter risk reward trade than I normally would, because I'd want to make sure I lock in those profits. The other thing that you could do is you could move your stop forward, and then you can secure the profits that way. Now, I've just made a video on how to manage your stops, so hopefully you can check that out. I'll put a reminder up here of the eye there so that you guys can see it if I do remember. If not, you'll have to search for it yourself. So the final thing that I do need to say, actually, and it's kind of obvious when I do say it, but it doesn't really matter if you have a small account or a big account. And the thing is most important about trading is you have to find a profitable strategy. And I do talk about this so much on my channel, how you're going to create data, how you're going to backtest things. There's backtesting videos. You can search my channel you want. You have to find and prove a strategy is profitable before you even go into trading. So you have to figure out different ideas. You're going to have to scroll back. You're going to have to backtest them and see if the logic of the idea does actually in turn make money after you've tested so many sample sizes, 25 data points, 50 data points, things like this. And if you don't have a profitable strategy, then there's no point to even be trading, because you're just gambling at that point in the very end of the day. So again, guys, I am going to actually dive into a strategy on how to trade with a small account size. So we're going to actually figure out a quick strategy. I'm going to show it to you. It's going to be a variation of how I trade, most likely, so that you guys can most easily, as beginners with small account size, make it very, very simple for you guys, and then you can actually make money. I think this strategy should work quite well for you. So please make sure you hit that subscribe button, and if you like this video, please make sure you hit the like and something else.